Whether you are just starting or have been running your business for a while, keeping an eye on the right financial metrics is key to long-term success. Hey everyone, welcome to today's live stream. And I'd like to apologize for coming behind the schedule. This is due to our internet service. Please pardon us. Pardon us. As usual, my name is still J. Taiwo Popola. I want you to share this video. Very important. It's very important to every small business owner. These are the things to look for your business to be able to know the financial health of your business. So please share it. Share it to every small business owner. Share it to them. Let them know. And of course, please do not hesitate to like it. And also, please ask your question. Ask questions. And we are waiting for you at the comment section for your questions. And if you are coming across videos for the very first time, follow us. Just follow. And if you are watching this video on YouTube, please subscribe to our channel. And as you subscribe, click the bell so that we can always let you know when we are coming on here. So today, we are looking at key financial metrics every small business owner should track. It's your duty to track them. So we'll be looking at these metrics today. So you know what? Understanding your business financial health is not just for accountants. So many small business owners has really assigned this to accountants, whereas it's you that should be more concerned about these metrics. It is critical for making informed decisions. So let's look at just five essential metrics every small business owner should keep an eye on at every moment. So once more, you are welcome. Let's dive into it. The first metric is your cash flow. This is the money moving in and out of your business. It is like the bloodline of your company. In fact, people do say cash flow is the lifeblood of any business. So positive cash flow means you are earning more than you are spending. And of course, the opposite will be the case. If you are having negative cash flow, which means you are spending more than you are earning. While negative cash flow can always signal trouble, whereas positive cash flow gives you peace of mind. So, I'd like to tell you that you have to make sure to track it monthly and understand if you have enough cash to cover expenses and invest in your growth, or rather invest in the growth of your business. Metric number 2 is what we call gross profit margins. Gross profit margins. You see, gross profit margin is measured by how much money you are making after covering the cost of goods sold. How much profit you are making after you have covered your cost of goods sold. And of course, the way to calculate this, I will not give you formula, but it's a simple way. Just remove your cost of goods sold from your revenue and put it above your revenue. It will give you your gross profit margin. What I'm saying is that for For some of us, we can just put our gross profit on our revenue and we arrive at our gross profit margin. So a healthy profit margin shows your products, shows your products or services are priced in a goodly manner. They are priced well, and that your business is operating efficiently. Maybe I need to mention that once more for you to know. A healthy profit margin shows that your products are being priced well and that your business is operating efficiently. Let's look at metric number 3. Operating expenses. Operating expenses. Before going to this, I think I need to really make you understand the difference between your cost of goods sold and also your operating expenses. Cost of goods sold are the costs that you directly incurred in that your product or service, whereas operating expenses are the expenses you incurred in running your business, in operating it. And the expenses are like your rent, your printing and stationery expenses, your telecommunication and internet subscriptions. All these are your operating expenses. So, and of course, let me mention the common one. If you have employees, it is salaries and wages. So let me just wrap it up this way. These are the everyday costs of running your business, like rent, utilities, and salaries, just to make it clear to us. So tracking this helps you understand how efficiently you are managing your operations. High operating expenses without increasing revenue could mean it is time to trim costs. It could mean it's time to trim costs. And in fact, you need to go further in these operating expenses. Try and look at the percentage of each expense to the total expenses so that you can know where you are actually spending your operating expenses. Metric number 4, customer acquisition costs. This is not normally observed by most small business owners. Customer acquisition cost, we call it CAC. Customer acquisition costs tells you how much you are spending to acquire a new customer. You calculate it by dividing your marketing and sales expenses by the number of new customers gained. I think I have to repeat this once because it's not popular among small business owners. I said your customer acquisition costs is calculated by dividing your marketing and sales expenses by the number of new customers and sales by the number of new customers and sales expenses by the number of new customers gained. If your customer acquisition cost is high, it could mean your marketing efforts need adjustments. Let's move on to metric number 5. Metric number 5. This is break-even points. Break-even points. I want you to know that break-even point too is not popular among small business owners. And this might be because some people find it difficult to understand the concept behind it. And this is when your revenue equals your expenses. When your revenue equals your expenses and you are not losing or making money, we call it break-even point. At that point, you are neither making money nor losing money. So know your break-even point. Help set sales targets and pricing strategies. Those are the important things there. It helps you to set targets of what sales do I want to, how much quantity do I need to sell to be sure I make money. And of course, your pricing strategy has a key role to play in this. So this is a must track metric for any small business. Before just wrapping up the whole thing, once more I want to remind you, please share this video to other small business owners and also like it. And of course, I'm waiting at the comment section to answer your question. And also, if you are coming across our video for the very first time, please do not hesitate to follow us. If you are watching this on YouTube, please subscribe to our channel and click the bell so that you will not miss any of our videos. Let me just wrap up this way, that keeping an eye on these 5 key financial metrics will help you steer your business in the right direction. If you found this helpful, just give us a thumb up. And of course, once more, share this video. And don't forget to comment with your questions below. Thank you for watching and thank you for listening to me. I want to tell you that you need to track all these metrics for your business to grow. Wish you happy tracking. Till next week, that I'll come your way. Peace unto you.